If you're a buyer in Phoenix, you've noticed that rates are rising. What can you do in this environment? We'll talk solutions coming up right now in this episode of the Arizona Report. Welcome to the Arizona Report. My name is David Meek. I'm a licensed Arizona real estate broker, and today we're going to talk about what buyers can do because rates are climbing. My guest in the studio today is Scott Morrow. He is a branch manager and loan officer with Movement Mortgage in Scottsdale. Scott, welcome to the Arizona Report.
Oh, thanks so much for having me, David. I'm thrilled to be here, and as I say, Scott from Scottsdale.
Scott from
Let's
Scottsdale.
Go, baby.
Well, there are buyers out there right now, Scott, that might be a little bit panicked. First of all, there's an inventory crunch under $300,000. There's not a lot of choices, and buyers are probably watching the news and they're seeing interest rates climb. Now, this spring, they shot up quickly and they've kind of leveled off since May, but there's some evidence that they're going to continue to go up a little bit. In that type of a scenario, what options do buyers have to control their payment and their interest rate?
You know what? That's a great question, David. There's multiple areas that a buyer can practice in order to save some money. And one of those things can be as simple as keeping an eye on their homeowner's insurance. It's one of the things that we recommend as someone is in the middle of a purchase transaction that we, as lenders, see a lot of those deals that come through, right?
Okay.
And on occasion, it's a quick conversation, and sometimes it's my dad's insurance agent. And
so shop the homeowner's insurance. That's a good strategy.
What we're talking about right here is how do we claw back some of the funds to keep our monthly savings or monthly payment where we want to. And another portion of that might be is how do I keep more money in my pocket so that I have some additional flexibilities or I have the opportunity for my money to earn income for me, right?
Okay.
So maybe that could be instead of putting 20% down, everyone says, 20%, that's you got to do 20%. You avoid the mortgage insurance, right? It's
the PMI.
It's the PMI, right?
Yeah.
On a conventional loan. But the reality is if you're buying a $400,000 house, that extra 5%, that's $20,000. And what you might see is on a $400,000 purchase and a $380,000 loan, that mortgage insurance, someone with excellent credit, it might only be like $70 a month.
So somebody who's putting less than 20% down can lower their payment by putting slightly more on the table.
Well, yes, they absolutely could. So if you have the funds and you can put more money down, you have an option to save money on the monthly payment.
Okay.
If you kept an extra $20,000 in your pocket and your interest rates let's just say it was in the mid fours, and you had an opportunity to earn money in the market or in another area on your $20,000 to out earn the mortgage interest, there may be some opportunity costs for that money. So it's always something that I like people to explore when they're running their math, because the best thing we can do is give people options so that they can find what's flexible and comfortable for them.
And you can do that once you take someone's mortgage application. You can look at the whole picture and put them in a program that best fits their needs. I think one of the important terms too, and I have got two charts with me here today, but and these are from the Federal Reserve Bank in St. Louis. One is about a 7-year chart that shows interest rates ticking up and they're running off the right edge of the screen. But if you scale back and you look at a second chart, which I'll provide here in just a second, this is the 50-year chart, the historical average for U.S. mortgage interest rates over the last approximately 50 years. I think it goes back to 1971. But you can see that the historical average is about 8%. They start out in the 70s at 7 or 8%. And they spike up in 1981. You and I were probably riding our banana seat twins around the cul-de-sac.
I do love banana seat twins. That is an accurate statement. With the handlebars, some wheelies.
That's right. The playing cards in the spokes. But 1981, rates spiked up to, I think it was 18.63%.
Wow.
I wasn't in the business at that time, and you probably weren't either. But then rates on over the arc of time have come down, and they hit a low of 3.31% according to this Federal Reserve Bank of St. Louis chart in November of 2012. 3.31%. So buyers in their minds are thinking, if they've only considered buying a house for a couple of years, rates have been in this 3% to 5% channel, and oh my gosh,
they've really been in the 3% to low 4%, right?
Right.
People, you know, there's a paradigm shift in people's mentality that we've had to explore, and I think it was maybe August of 2013 where we saw rates spike up a bit. They moved about 0.5% is what I seem to remember, and we had a little bit of dead air. People had a hard time getting used to seeing something different, but the reality is the monthly payment wasn't some giant thing.
Right.
And so when I talk about looking for the right homeowner's insurance, it's not because I think there's every homeowner's insurance person is getting gouged. It's no, hey, how do I save $10 a month here? How do I earn a little bit more money on my money outside of the market as opposed to having it in the house? Sometimes it's this flexibility.
And the incremental, a 1/8 jump in the interest rate or an extra $1,000 borrowed really doesn't move the needle that much. Just a couple, I say a couple bucks, maybe $5 to $10, depending upon the situation. It's not time to panic, I guess, is what I'm trying to get across to the listeners.
No, I think that's absolutely right. The reality is when we were in the middle of the kind of mortgage meltdown crisis, you'd watch Good Morning America. I remember seeing it. I've done loans around 22 years, my entire adult life. I'm bad at most things.
But you're good at loans.
I'm good at mortgage. And they were saying you can't buy a house without less than 20% down, and it wasn't even close to true. Yeah. There was literally programs out there. I think there was a Merit Dream program and a Nehemiah, which were these down payment assistance products.
Nehemiah.
And it was 100% financing effectively. Okay, and it was completely baffling to me. It was the media kind of just throwing stuff out there as one person's view on things. And it was misinformation. So,
yes.
Yeah, the rates are up probably about 5/8 higher from today versus about last year.
Okay.
And so, if you're looking at things, does that make your payment more? It sure does. There's not a way around that. But the reality is there was a time where getting the house was the best deal. And what do you measure it against? What are the rents doing? So
they're climbing in Phoenix right now.
They are. So we may think, the payment's higher, the house isn't a good value. Well, what is your alternative?
Staying in, if you're staying in the apartment and rent's going to be another $75 a month next year, and that has to factor into the equation as well.
100%. There's no guarantee in a year that it would just be $75. I've got a buddy, and he's in a townhome and he's paying $1,800 a month in rent. And he goes, well, I was kind of thinking and looking. He goes, Scott, I can't afford to move. If this guy says anything to me, he goes, the rents are up.
Yes.
And because it could be a $200 or a $400 a month change. And, you don't see that type of drastic increase if you're sitting in a 30-year fixed mortgage typically. You don't normally see property taxes jump up some crazy number.
Or even homeowners insurance.
Or even homeowners insurance.
Yeah. So with a 30-year fixed loan, you're locking in those costs. That's part of the opportunity cost of missing a deal, even in the scenario where rates are rising. Locking in a 30-year fixed rate below historical standards, it's a pretty good deal.
Yeah, absolutely. And I think it gives – I'm a big believer of if you can't sleep at night, don't get the loan. So if you know and qualify for your comfort, what you're comfortable with on a monthly basis, and then great. And that's my question. Are you comfortable with that payment? Are you happy with that? I wish it was a few bucks lower. Me too. But are you comfortable with it? Can you go to bed? Do you not? If you go into bed every night worrying, then hey, listen, let's have you look around.
Yeah, it's not the right loan.
That's not the right loan. And
if I have if I'm looking at a 30-year fixed, is a good strategy switching to a 15-year fixed?
You know what? That's a great strategy if you want to save some interest over the course of the loan.
And 15-year rates are lower than 30-year rates.
Yeah. Normally, at least right now, we typically see something about a 0.5% difference in the 30-year fix versus the 15-year fix, where the 15-year fix is about a 0.5% lower than the 30-year. What it does do is, and people tend to buy houses like they buy cars, which is what's the payment, right?
Right.
And so that 15-year note. Out in Arizona, we get a lot of second homes. We get a lot of retirees, and they've got some significant funds, and they may be comfortable doing that, and they prefer the lower interest. But there's a lot of first-time home buyers out there where, the drastic change in the monthly payment moving to the 15-year is more of a cash flow issue than an interest issue.
Okay.
And that's why when we're talking about how do we save money on a monthly basis, I'm looking at more of a cash flow, and some of that's the interest rate. Some of that could be mortgage insurance and what the effective rate on that is. And you had asked me earlier, Scott, what's a factor that can really help people save money? And we don't think about it till we go to apply, but it's your credit score, right?
Let's talk about that. Your credit score. If take a look at your credit score, make mortgage application, find out what your scenario looks like, and if you pay down some credit cards or fix some things here and there, within 30 days you're looking at a new higher credit score, which could bump you into a new tier of savings on the interest rate.
100%. We do offer a service that is like a credit wizard. So when we pull a credit report, on the front page of the credit report, if need be, it'll tell us the opportunity that you could potentially get to. So if you're at a 690 credit score, but maybe your credit cards were at a high balance at the time the credit pull happened. Well, normally they're not high. You say, I just took a trip, I did something else. Well, on certain loans, we can actually go and do a quick rescore where the balance gets paid down. We send it off to the credit vendor. They go to the bureau level, and it gets adjusted and fixed during the transaction. It normally takes 7 to 10 days.
It's like pushing the refresh button on your credit score. Instead of waiting 30 days, you can do it in 5 to 7.
Yeah. And I always say 7 to 10, but it's probably
7 to
5
10.
to 7. I like to pad a little bit.
Absolutely.
I like people's
I understand.
expectations to be met and happy, but what that can do is that can be immediate savings, because we could potentially lock the rate and say, hey, we're gonna help work on the credit score, and when your credit score goes up and beyond, this is what your rate would be. And if you could save 1/4 or 0.3% on a $300,000 deal,
that's money.
It's money. It adds up. So, you don't always get a real consultation with everybody. That's something that we try to be holistic on our vantage point, which is, all right, in big picture, what are we looking at? Another way to save money is maybe do a quick close. You're in an aggressive stance. Maybe there's multiple offers out there, and you say, hey, can I close this loan in 2 weeks? We're going to offer you a little bit less. We're going to offer you $5,000 less on the house, but we're going to close in 2 weeks. We're ready to go. Here's our pre-approval, and it's go time.
Sellers like quick closings.
Who doesn't love cash in hand?
There you go. If you have a quick closing, or let me back up a little bit. As the buyer, if you can close in 30 days, that's pretty standard. 30-day lock.
I think it's standard. Yeah, I think it's standard for a lot of companies. It's not standard for everybody.
Okay.
Sometimes people, you'll go to certain institutions, and it'll be 45 days,
Okay.
right? And so then there's an opportunity cost of, well, what am I paying? Am I paying an extra half month's rent, right?
Right.
All right. Well, my rent's $2,000. Okay, that's an extra $1,000. Okay, like when you get into the minutia about looking for savings opportunities, there's a lot of different ways to look for solutions.
Right.
And so, it's funny. I had an agent call me, and we had a borrower we'd done some work on, and he called and said, hey, this just fell out of escrow. The sellers still want to close at the end of the month, and it was like the 14th. And I said, okay. He goes, can you get it done? And I go, yeah, we can get it done.
In how many days?
And we got it done in about 14 days.
Wow.
And so
okay. That's remarkable.
It's quick. Okay,
Yeah.
and Movement Mortgage LLC it's super fast. Okay, it's one of the things that we concentrate on, and we really specialize in it. We've got a great system and process. But what he did is he goes, I'm going to go back, and he negotiated basically an extra 3% off the purchase price that was already under contract, that it had already appraised for with this other contract. So he went and saved these people $9,000. Okay, he used in that $9,000, he used $5,000 to pay closing costs and prepaid items, roughly.
Sure.
That's what it was, and the buyer was happy as a clam. They got a great deal. Think about saving and not paying interest on $9,000. Oh, not bad.
Not bad. Yeah.
Right? So, there's opportunities to save within every situation, and sometimes it's about speed. We had a transaction that came. It was with a large institutional bank here in the U.S. I got a phone call from an agent. Gosh, this was just a few weeks ago, and I'm going to bore you with a super fast story. They had the deal for 50 days.
Oh, my gosh.
50.
Way
okay?
too much time. Way too much.
Close of escrow was the next day. I think I got a call on a Wednesday night.
Trying to close Thursday.
Said, and they were Wednesday night, Friday close. So
Okay.
they said, and they said, hey, can we want to talk to you about this? And we ended up really doing the app, I want to say, on Thursday, the next day. I closed the following Friday. Now, this was a kid who had decent credit.
Sure.
He
Clean
had
file.
Clean file. He
Yeah.
was a new college graduate. So he had limited credit because his mom had always helped him out. This is a great kid.
Mm-hmm.
I have to tell you, the selling agent couldn't believe it. I said, listen, we're going to get status updates. We're going to get approvals in writing or conditional approvals. I need your sellers to hold on to us.
And as a broker and a listing agent, I've been in that position before, and you get a call from the new mortgage broker.
new
who's
mortgage
landed
guy.
in the seat.
Yeah.
He's in the hot seat, and he says, we're going to close this in 15 or 20 days, and I'm a little skeptical.
And
But
the guy goes, I don't believe it. And I
Yeah.
said, well, I'm going to drive down to Tempe. Our West Coast operations hub's in Tempe. We got a whole pile of people down there. I said, I'm going to push it through. I said, just stay cool for me. I go, we'll get an application out. We will get we'll have them e-signed, get the docs back. We will get the a file underwritten because we're going to underwrite that separate, and we're going to get the appraisal ordered. We did all that the next day, and an LSU out to them.
loan status update.
Loan status update, and because it's required, it's in the contract.
Yeah.
And I said, now go to your sellers. I know they're going into the weekend. I know they're supposed to close today, but you tell them, Scott Morrow's, we're going to close next Friday. He goes, there's no way we're closing next Friday.
I love it.
And I said, I'm just telling you, man, I'm going to continue documenting everything so that you know what's happening.
Yeah.
Because the communication piece is really, it's key, right?
Critical. And if a buyer's on the cusp of losing a deal because another mortgage company screwed up, you want your new lender to be in hyper communication with the seller and the listing agent to keep the deal together so that you can get the house.
Well, and this is a kid who they were probably going to try to work on keeping that earnest money. Like they were,
man.
the guy's he's reading through the contract. I said, don't read through the contract like, why should we cancel? I go, read through the contract of how can we keep this together?
Let's keep it together. We've got a buyer that wants to buy and a seller that wants to sell.
Spirit of the
Let's
deal.
do it. Yeah,
This
spirit
guy
of the
wants
deal.
to buy it. They want to sell it. I know I've stepped into it, but I go, but everyone's going to know I'm in it, and just everybody hang loose, and we'll know what's happening as it's happening.
Yeah.
But
You got it done.
Yeah. No, we got it done, and that's a success story. So I'm officially bragging. I'm sorry. You asked me about rates, and I'm talking about this. But
Well,
it was good.
This is great. I've learned a lot today. What if somebody's out there and they're watching this video, Scott, and they say, you know what, I want to talk to Scott about my situation. I want to make mortgage application and get things underway. Where can they call you? Where can they go online and find you?
Oh, you know what? That's super nice. You can always reach me. You can contact me on my cell phone, 602-214-6727. That's 602-214-6727.
How about a website?
I tell you what, my website we're going to have posted on this video. You
got
can
it.
write it down.
You got it. We'll put it into the screen.
We've got an easy application that if you are an online type of person and you want to fill out your data and upload everything securely, you can do that. I'm always a big believer. I like chatting with people. I like to make sure that I hear what people are looking for, if there's concerns, if there's something that sometimes, the trick to technology is that the data going in has to be accurate.
Yes.
And so when someone does TurboTax by themselves, you think they ever make mistakes?
Sometimes.
Okay, so if someone's doing a mortgage application online by themselves, this is the only piece of it, right? And they're a complicated file, and they put stuff in, and they don't need to know that, or no, that shouldn't impact anything. Well, that's how you catch stuff late.
Yeah.
That's why I like conversations at the beginning. I'm always happy for the data, but
And what the reason why I like working with you and why I have referred my clients to you is because you are proactively looking for the things that can cause an obstacle in the closing transaction, and you're intercepting those, dealing with them, and putting those fires out well in advance of closing. And that's why I appreciate what you do.
And I appreciate the opportunity to earn the business. It's always great working with people I like and trust, and you do a great job, David. The customers that we've always worked with together, they couldn't get better deals. They've always been super happy. So,
Awesome, thank you.
All right. Well,
let's.
What else we got?
I think we're good. We've actually. I'm looking at the clock here. We've got to wrap up a little bit, but thank you for coming in today, Scott Morrow with Movement Mortgage in Scottsdale. You are the branch manager, licensed Arizona loan officer. Throw your NMLS ID out there real quick.
214-589, and some might have my title as market leader, but all those things do fall together.
Sounds good. Well, thank you for coming in today. My name is David Meek, licensed Arizona real estate broker. You have been watching the Arizona Report. If you'd like to learn more, go to my website at arizonareport.com, where I have my observations on the Phoenix real estate market. If you'd like to call, my number here in the studio, 480-999-MOVE. That's 480-999-63. Thank you for joining us today. Until next time, we'll see you on the Arizona Report.